Hey friends, welcome back to another episode of Making Sense of Your Market. Today is Monday, it's March 28th, 2022. Another great update for you today. We're talking about what in the heck just happened to interest rates over the last 2.5 months. We've seen the greatest rise in 30-year fixed rate mortgages in the history of the United States of America in a 60-day window. And we've just seen that in the last couple of months. So why? People are asking this. I taught a homebuyer class the other night, and it was one of the top questions, like what is causing interest rates, or why are interest rates going up so fast? I'm going to talk about that today. Every single week, I try to bring you an update on mortgage rates. Are they up or down week over week? I try to bring you a money tip. And then lastly, I review the book, the 52-week series from the best-selling self-improvement book, The 7 Habits of Highly Effective People. We're on week 36 this week. Great message that we'll spend less than 20 seconds on at the very end, but super powerful. So let's talk about mortgage interest rates today. 30-year fixed rates are up week over week. Again, for like the 10th week in a row, it seems like, or at least the 8th week in a row. 30-year fixed rates are flirting with 5%. 5%. I can say in my 14.5-year career in the mortgage industry, I've seen 5% maybe once or twice. So this is not something we're used to. Don't let rising interest rates, though, detour you from getting into real estate. Remember, what goes up must come down. 30-year fixed rates will come down in the near future. I believe we are headed toward a financial recession, not a housing recession. And during recessions, money becomes cheaper. Right now, you have to understand the Fed is raising the price on everything right now to slow down the power or the strength of the economy right now. We've got a lot of money circulating. They're just trying to control that. I don't know if it's going to work. There's a lot of skeptics out there saying it's not going to work. Traditional means aren't going to impact the current day problems that we have in our economy. We'll see. But don't let rising rates detour you from buying real estate. Real estate's still going up in value. It's going to continue to go up in value because of the supply and demand issue. But yes, 30-year fixed rates are up week over week, 4.75 to 5%, depending on your credit score, down payment, type of property purchased. If you have any questions on mortgage rates or the market or the economy or inflation, or are we heading toward a bubble, all these things that first-time home buyers are asking me right now, and rightfully so, I'm happy to shed some light on this. You guys, listen, 15 years in the mortgage industry. I've gone through 2 different recessions. I've gone through 2 different pandemic-type issues like we saw during COVID. I've seen interest rates at 2.5%. I've seen interest rates at 6.5%. I've seen 3 different presidents now, and each one of them changed the economy while they're in office. That experience and that wisdom is valuable as you are getting ready to purchase a home or making the largest financial decision of your life. So lean on me, and I'm happy to share as much information as I can with you, or at least dig up that information for you. Remember, I'm in the markets with you. I'm buying homes as an investor as well. I'm selling homes as an investor right now, and I have plenty of money in the stock market. So I too, in the trenches with you, and have a lot to lose by making the wrong decision right now. So happy to loop you into any conversations that I have with my financial planners and any financial decisions that I'm making personally right now. Let's talk about what caused these interest rates, though. What's happened over the last 2.5 months is unprecedented in the United States of America in a 60 to 90-day window in regards to how fast rates went up. Number one, the Fed stopped purchasing mortgage-backed securities, which kept rates low. The Obama administration did it, the Trump administration did it, and the Biden administration did a ton of it during COVID. Here's the thing, they're pulling back from financing or buying mortgage-backed securities, which kept rates low, which is causing rates to increase. The other thing that's causing mortgage rates to rise is Fannie Mae. Fannie Mae came out 2.5 months ago and said, hey, on 3 different loan program types, we're raising our cost for these mortgages. Remember, they help dictate the price of these mortgages from a loan level pricing standpoint. So on investment homes, second homes, and high balance loans, those are loans priced in the mid to upper 600s to $892,000 here in Washington State, at least in the Puget Sound area. Those loans got more expensive to the tune of about 1.5% in points. So if you were to look at a high balance loan 3 months ago, you paid about 3.375 on a 30-year fixed with about 0.25 points. Today, it's 4.99 with 1 full discount point. On a $700,000 or an $800,000 loan, that's $8,000 in closing costs extra that you have to pay to get that rate. On a second home, 3 months ago, 3.375 with a half of a point. Today it's 5.125. Get this, with 3.5 points. That's a lot of money in closing costs you have to pay to get that loan program now. Now, these are backed by Fannie Mae. These are loan programs at every lender. These aren't specific to New American Funding or Bank of America or Chase Bank. All of us have to play by the same rules with this. So if you have any questions on this, please let me know. I like to always explain the why behind the what. Let's talk about our lesson this week. Week 36, Dr. Stephen R. Covey says, avoid autobiographical listening. What that means is when you listen to someone, you're filtering what they're saying through your own experience. He says this one sentence, it's so profound. Listen, or your tongue will make you deaf. So powerful. It all comes down to listening a little bit better, a little bit more, something I'm working on personally. I hope this information was helpful. If you have any questions, please reach out to me, and I look forward to bringing you another update this coming week.